Okay, so during the poll, if you look at one of the questions, or the second question is that where are we today? So in other words, the poll was all about, is it a strong bull, is it a weak bull, are we in a strong bear or a weak bear? Okay, so what I'll try to do is that I'll try to explain why we are today in quadrant one, which is a weak bear. If you recall, in March there was a huge sell-off, what's called capitulation. So we consider that capitulation as a strong bear, right? Now that we have rallied from March to about June, July, we are now basically on the left side, which is the beginning of quadrant one. So what we're saying is that quadrant one basically takes time for it to reverse. So there are basically 3 or 4 symbols that we look at. Is it a V with a square root? Is it a V with a W? In other words, a rally and then a retest of the previous low. Is it an L completely just goes sideways before it really reverses? So those are the things that which we have been talking about. This was created 10 years ago. And now what we're trying to do is put it in a nutshell so that you'll be able to determine if you look at it, you try to understand what it is. And based on the post, basically that you have understand already that it's a weak bull, weak bear, strong bull, strong bear, because in your seminars you can see it already. Let's go to the next slide. Next slide is what we call the bull bear cycle. So if you look at the whole thing, what happened is that the US market, after the sell-off in March, you would see the strong rally that came in. I will explain to you later on why the US is already like in a double top, right? So in other words, the US today is in a weak bull. It's a weak bull. Even in some of the industries, for example, technology, healthcare, you're seeing new highs. But we consider that as a weak bull. So what you're seeing now is that the Philippines and the China is the same. So after the huge capitulation that we've seen in March, we have now seen what we call the short-lived confidence. Because of oversold condition, it capitulated, and now we're seeing the rallies. Now, we believe that we are somewhere on the short-lived confidence now. So in other words, what you're seeing is this. The strong bear that came in March, then we've seen the rally. We've seen the rally on the right side, which is about almost 2 to 3 months already. We consider that as a weak bear. Now, will it go down to retest 5,003 or 4,000? I don't really know. I don't really know whether it's gonna retest or not. But what we're seeing is that we believe that this short-lived confidence is there already, and we are at the center wherein can the center hold? Can the center hold? Can you go back now? Okay. So you need to understand that this is now we're going on the quadrant one, which is a weak bear, right? So let me show you some slide outside. Look at the next one. Look at the next slide. This is the NASDAQ. This is where the technology issues is. Look at it. Why did we say it's a weak bull? It's because it went to new high already. So in March, there was a huge capitulation and it rallied all the way to new high. So this includes all the new normal issues, all the technology issues, the cloud, the AI, the 5G, all the biotechnology issues, all these vaccines that are trying to develop. And if you look at it, the top 4 issues listed in the US, like Microsoft, Amazon, Google, is already, even Apple, the four stocks, which is comprised of the FANG indirectly, is already now equivalent to all the total market capitalization in Japan. So you can see that very clearly already, is that it is the technology issues, all these technology issues, or the new, well, today they call it the new normal, the FANG, which everybody is using, is already almost at equal par to the entire Japanese market. The other, of course, because of the weak dollar, which is the Because what happened is that I think the Fed basically came into the rescue in March and started pumping money into the system. I think they printed over 7 trillion already to really help the US economy. You can see that because of that, almost negative interest rates, and you can see the weakness of the US dollar. That green one is the US dollar. It's going new low, and the equivalent of that, vice versa, is really because of the weakness of the dollar. You can see that the price of gold has gone to new high. In fact, this is 2 days late already. We hit a new high yesterday for the gold, for the precious metal. In fact, silver has gone up 20-30% in the last few days. So you can see that there is a shift. Money is moving out of the US dollar and going to the precious metals. And what we're showing in this slide is the difference between NASDAQ and Russell 2000. Russell 2000 is composed of the small and medium enterprise, which you can see has not gone to a new high. But exactly what you're seeing here is that we consider this as the traditional businesses, very similar to what we have here: properties, banks, hotels, casinos. It's all the traditional businesses are in the Russell 2000. You can see the divergence already that we're in. The NASDAQ, which is the technology issues, are already on the new high, and then the Russell is lagging from this huge rally. And then the next one you can see is the same thing in Hong Kong. The Tencent, the Alibaba have gone to new high, where the traditional property companies, banks also in Hong Kong is also lagging. In fact, today we have a new low today it's breaking down from the major support today. I think because of this China issue that consulate are being forced out of the States. Today we have a new low in Hong Kong. So you can see the vulnerability of the Hong Kong traditional businesses. While Tencent, Alibaba will continue, those issues will continue to stay afloat, stay on the upside. And so what this slide is basically, it's just a summary that all the financial markets, all the banks, financial services in the world are looking the same. This is an XLF. This is a composition of all the different top banks like Citibank, Bank of America, JP Morgan, Wells Fargo, versus the biggest bank here in the Philippines, which is the BDO. And you can see we're moving the same way. The rally came in April and May, and then today you're seeing it retesting. So like BDO, is it a W? It's not. It's like an L already. No? While in the case of XLF, it can be just a W, or it can just go sideways. No? Right. So we are trying to see each and every of these all these indices that I showed you, including the ETF, that individually the traditional business are lagging as compared to all the technology issues. In the next slide, what I did was I always show this, and I just did this. I gave a talk just this morning, just to be able for you to try to evaluate yourself, who you are. It's called the investor's journey. If you are long term, there are two things. Building wealth, which is basically passive investing, is the easiest. Why do we say it's the easiest? Because you're just building wealth. You don't have enough asset. You don't have enough money. Basically, you're just focusing on save, invest, reinvest, which I call the basic law of money, right? That you need to set aside a small amount of money, put it in there, start buying all these companies that you know that are the blue chips, and then reinvest it, or you just buy an index fund. The problem is, after 10 years of investing, you need to understand what we call risk on, risk off. You need to be able to see the assets. Your assets now have gone, you've invested for 10 years, and then what happens is that when there's a problem, a crash that comes in, you can lose 10, 20, 30, 50%. And if you don't understand when to step aside, you will have a problem. The other one is, of course, the active trading, which we're seeing today. We see Call Financial for the last couple of months have opened a lot of accounts. We normally open 2,000 to 3,000 accounts. Now we're opening 8,000 to 10,000 accounts. It's mainly because of this, the youth, the people, basically, everybody's locked down and everybody is in their computer trying to buy and sell stocks on a day-to-day basis. And that is the reason why I came up with this is that if you're an active trader, which is short-term trading, you need to know the rules of the game. If you look at all our content, all our presentation in COL, I have always remind people that if you want to speculate in the stock market, you need to know what you're doing. You need to know the rules, because if you don't know the rules, since 90% of the people that trades the short term loses money. So that's really what I try to explain to you. Now, go to the next slide, and you would be able to see that I will separate it already, right? Building wealth is about passive investing. Generating income, if you know how to trade based on rules, rule-based trading, active trading, yes, it is very profitable. The problem is the odds of making money in active trading is 10 to 15%. As against 85% of the people who are actively in the market basically loses money. And then the next one, of course, is after 10 years of investing, you need to know how to manage your wealth. So building wealth, managing wealth, and generating income. Now, you have to treat active trading as a business. I've said it so many times. Then look at this slide that we did. So building wealth, passive investing, age group, start early. When you're a teenager already, you can tell your parents basically to start investing for you. Risk appetite, almost nil. Time consumption, none. Strategy, easy investment program. Company type, it can be a blue chips or a PSE index. So it's a no-brainer. Building wealth is the easiest. If market goes up and down, you still don't have any money, wala ka pa ng pera, walang problema yan. Ang problema, pag 10 years later, you have invested for 10 years now you have a problem. You have to know how to manage your wealth, which is active investing. Age group is, 40 and above. We use 40 because that's the time where you have a lot of assets already. Now you have to know how to do asset allocation, when to make sure that, stocks is just 20, the stock portfolio is just 20 to 30% of your total portfolio. Because you have to remember, stock is considered as a risky asset. It can go up 10, 20, it can go down 40, 50% also, like what happened in March. So the risk appetite is low if you understand it. Time consumption is medium. So strategy is basically understanding when to accumulate, when to sell it also. Now, in generating income, this is active trading. What we did was we put 18 as the minimum age that you can start learning how to do it properly. The problem is the risk appetite is very, very high. Time consumption is also very, very high. And you have to use what we call the trading strategy, which is what's called momentum or trend trading. In the Philippines, we include counter trend trading. Counter trading is all about capitulation and then when it's supposed to be reversing. Company type can include informed speculation. Right? Okay, in closing, let me show you. I think April and Juanes will probably have their own issues, or maybe we'll probably have the same issues. So what I do is that I basically simplified it. I look at the telcos as an advantage today, because most of the telcos, even though their earnings are not so great, but at least single digit, they're still paying 4 or 5% cash dividends. So if you look at the chart also, you can see that the Globe, Telephone are basically outperforming the index. So that is one of our pick. No? One of our top picks is the two telcos. The other one is, of course, the essentials. No? The essentials basically is Pure Gold and CNPF, Century Tuna. So a lot of people are asking me, why not URC? I think URC is a good company also. The only difference between CNPF, Century Tuna, and URC is that URC is it's not essential, because you have a lot of Jack and Jill, sugar, what do you call it? You drink, there's a drink there. C2. So while CNPF is traditional, it's essential. Essential is they're in canned goods, tuna canned goods, milk. So these are all essentials. No? And if you look at the index comparing between the two issues, you can see that it's outperforming the index itself. So my top picks are basically 4 telcos, 2 telcos, Telephone, Globe, and then Century Tuna and Pure Gold. No? Pure Gold. And let me close by sharing with you a quote. No? And in fact, I used this quote this morning also. See, the biggest problem with most of us investor or speculator, whether long-term investing or short-term investing, the biggest problem is that, we put it in already in a lot of content, and we've been sharing this with you. The sad part is that most of you will probably have their own experience of making a lot of money using your gut feel, or in fact, today I received so many calls when ABS-CBN is dropping 30-40%, and then they were calling me and said, "What do you think? Do you think Duterte might change his mind? There's a SONA on Monday. Do you think that they will be able to maybe consider that ABS would be given their franchise?" So people are always speculating on this, especially when the high net worth people, when they see values, they think it's value, they will now allocate a small amount of money basically to speculate on maybe Monday President Duterte will announce a reconsideration of ABS-CBN. I said, we don't do these things. We do not gamble. No? That is the first thing that happens. No? So the biggest challenge with most investors is that, or speculators, is that they have their own biases. No? Because you have to remember, 30 to 40%, we're only 30-40% correct in being able to understand things that we can control. Things that we cannot control, we do not participate. Okay, so let me close it by this. When you declare, I am open and ready to receive, the universe not only hears you, it holds out its hands to help you. All right, so please, if you don't understand, please email us, Viber us. We have a channel. We will try as much as possible to answer all the difficult questions to the best of our ability. All right, thank you very much for joining us today.